Before we get into today's episode, I just want to remind everyone, SBA Today is now available on podcast streaming services. Catch up on all the latest news in the world of SBA with our beloved co-hosts Tanya Mazurik and Paul Long. I love the show because I always learn a valuable lesson listening to their real-life stories, and the way they deliver it and tie it back to what we do makes the show really entertaining and really fun to watch. Critics are calling it Regis and Kelly meets SBA Connect. Check it out today, and don't forget to subscribe to SBA Today. We have a legend on the pod today. He's done it all. Worked at the SBA, ran SBA departments, consulted for the FDIC, adjunct professor teaching, you guessed it, SBA lending, and he's spent a lot of time in servicing and liquidations. If you haven't guessed by now, our guest today is Lance Sexton. He joins us to share some of his stories, break down some of the new SOP changes, and we talk about a mission of his, which is important to me, which is transferring the knowledge of our SBA veterans to the future generation of good SBA citizens, to use Lance's term, and what he's doing at his local university is a big part of that. And guess what? The Art of SBA Lending podcast is on the syllabus, so you're all getting extra credit. Now, without further ado, let's get on with the show. In 2020, the banking industry was forced to accelerate into the future, and now there's more innovation than ever before. And many of my colleagues are embracing these tools, and they're winning. But the banks that are slow to adapt, well, frankly, I'm concerned. Here's an example. Bank A uses Lumos and has over 1 billion data points at their fingertips that allow them to, within seconds, access all this data. Local economic data, industry insights, even a predicted expected loss. And Bank B, well, their underwriter spends hours Googling it. Which bank do you think is going to be winning 5 years from now? Guys, we can finally make credit decisions using actual data. Let Lumos take your small business lending to the next level with cutting-edge analytics by going to lumosdata.com and scheduling your demo today.
Well, I mean, I am honored that you're here, first of all. Thank
I'm
you so
excited
much.
to be here.
People already know you, but you're Lance Sexton. You know, I got into the industry in 2012-ish.
Mm-hmm.
And, you know, I learned of you, some, years after that. But in doing this podcast, I tried to do my homework, and I knew you worked for the SBA.
Yeah.
But you really worked for the SBA.
I did.
What did you do there?
I was deputy director of the Little Rock Commercial Loan Servicing Center. I was actually on a job for the FDIC, closing a bank in Utah. And I had applied for a job with SBA in the servicing center probably 4 months prior to going to Utah to work on that bank closure. And SBA moved fairly slowly back then. And I get a call out of the blue while I'm working a project in Utah. I had a team of young MBAs that worked for me that helped me take significant SBA loan portfolios and basically liquidate those, get them in shape to sell to an investor who would buy that portfolio. And I get a call from Nikki Carrington, who was the director at the Little Rock Commercial Loan Servicing Center, and she asked if I'll interview it. I interviewed, and they offered the job, and I made the transition. I felt like I had worked SBA from, for instance, I was director at a small business development center. One of the things we did there is we helped banks by packaging SBA loans back when they were this tall. And I had worked with numerous small businesses and helped them get an SBA loan. I felt like I needed to work on the SBA side to understand why SBA did some of the things they did. I actually got to sit on an SOP committee when I was at SBA, and that was a very interesting task to see how that's actually developed. But I wanted to know how things worked at SBA. And so I felt like it was important for me to spend some time there to help me understand both sides of SBA.
Incredible. So when you say like an SOP committee, is that like the room where it happens, where they're talking about, should we change this? What should the wording be?
I think we were more of a preliminary committee that went through the SOP and made some recommendations on, SBA has tried extremely hard over the years to simplify the SOP, to make it a more understandable document. And that was some of the things that we were doing on that committee.
And what were they doing last year? Were they doing that last year?
I am absolutely certain that they did. Ray, I'm not going to lie to you. I'm glad the SOP is kind of difficult to understand at times because it allows me to provide training by digging into it. I mean, if I sit and told you I want the SBA SOP 501071 to be a really simple document that everyone could understand, I'm not real sure I'd be telling the truth because I wouldn't get the opportunity to come out and spend time with SBA lenders and give them my opinion of what the SOP means.
That's really well put and, honest, because you're right. It's like, it's always been gray.
I've always said the SOP, any SOP, whether it's the 505073, the 501071, it's filled with minimums and maximums and should do's, but it's not always clear. It's like in the new SOP, equity injection is really hard to wrap your arms around because we used to have a couple of areas of SBA lending where it was real clear. You got a 10% equity injection on a startup loan, as an example,
right,
or any change of ownership loan, you got a 10% equity injection. Well, the new SOP, there's no equity injection requirement on a startup, and most of it goes back to prudent lending practices. And there's even a statement. I want everybody to dig in and find this. There's a statement on there is a requirement for a 10% equity injection on a complete change of ownership. That's still there. But it says you follow prudent lending practices. So the financial institution has to go back to their commercial lending policy and look at what their equity injection requirements are. But if you read the statement below that, it basically says if the lender's opinion is that the borrower needs more leverage, then you can provide a lesser equity injection than is required in your prudent lending practice. So that's about as clear as mud to me. It certainly opens up the possibility that on equity injection, they can do just about whatever they want to, but they still have to rely on prudent lending standards and make a quality loan. So, I've always said the equity injection number, if they give you 10% and it's a restaurant business and you don't feel comfortable with restaurants, it's okay to require 25%.
Yeah, it's all about documenting at this point.
Yes.
and explaining your thought process behind it. When you went into the SBA to learn how they think, do you think that way of thinking still applies to today and the way they're thinking today?
A lot of the processes, procedures are similar. I do think SBA is making a big effort to make SBA lending easier for the financial institutions and the non-bank lenders, thus encouraging more financial institutions to participate in the program. But a story I love to tell, Ray, is my first day on the job at SBA. I walked into a meeting with Nikki Carrington, a guy named Hollis Carter, a guy named Don Schuneman, and Jerry Johnson. There was probably somewhere north of 100 years of SBA experience sitting in the meeting room with me, and I was now the deputy director. And they start off on this big conversation, and they were throwing acronyms out at a pace. And I'm over here with my yellow notepad writing every acronym down, and because I wanted to understand it. And that's what, so I went back that night, and of course the internet was very different. It existed, but I started looking up in the SOP, looking up online what each of those acronyms meant. And so when I came back and we had a conversation, I actually knew what they were talking about. And I think that's how a lot of new SBA lenders feel when they get into the field. There are a lot of acronyms, a lot of processes and procedures that seem kind of foreign to them. And that's why there's such a need for training for SBA lenders. But I can remember, Ray, I had a yellow legal notepad with 2 pages of acronyms that I had to look up and figure out what they were.
The learning curve is steep. I mean, I remember, Chris Hearn, who
Yes.
you're connected to, he hired me as a 21-year-old, obviously I knew nothing about anything. And all of a sudden I'm in this environment with, there's about 20 people. It was over at Mercantile Capital. And we're all in an office at the time, except for like 1 or 2 people. And I was just soaking it up like a sponge. And it took me, I was there for 2 years before I even thought I knew what the process looked like. Because like the deeper you go down the process of originating an SBA loan, to me, it was like the more complicated it got. Once it got to closing, like forget about it. Like I had no idea what was going on. But it took 2 years, and I still, when I look back at it, thinking I knew a lot at that point, and then I went out to go be a BDO, I really knew nothing. I was still so early, and I didn't probably have the right training.
You mentioned Chris Hearn, who I know so many lenders across the country, and I know why he hired you. Chris is one of the most entrepreneurial SBA people I've ever been around. And he saw great promise in you. And Chris is a person that attracts great talent. So Ray.
Oh, okay. So we have that in common.
You're great talent, my friend.
I don't know what he saw in me, but it may have been there, it may have not. But like one thing he made me do is read a bunch of books.
Mm-hmm.
And that opened my mind. Think and Grow Rich was one of the first books he put in my hand. And, that was like life-changing.
He still does that. On several occasions since I've been working with Chris, he still sends a book to me and others on the team to read. And some of the books he shared with me have been eye-opening. Mm-hmm. They really have.
It's no secret that most entrepreneurs are busy, and getting them to focus on their underwriting checklist is a full-time job. So when it comes to the business plan, projections, and assumptions, I'm a huge proponent of bringing in an expert. Rapid Business Plans is a trusted partner to small business lenders and their borrowers. They make it easy for entrepreneurs to tell their story in a format bankers love. Their team goes the extra mile to ensure everything is done fast and done right. And they're all based here in the US with employees across 4 different time zones. They just completed an export business plan for one of my borrowers, and they were super happy. We got their CRE expansion loan approved, and now they can move forward in their business with a clear plan. Rapid also offers feasibility studies, which I highly recommend for any independent startup loan. So go to rapidbusinessplans.com for more information and set up your Get Acquainted call today. I'll leave a link in the show notes below.
You mentioned it, when you sat down here earlier, like you went to go close a bank, like nonchalantly, like that's just something someone does. I had to go close a bank, yada, yada, yada. Like, what are you talking about? You had to close a bank. What was your role? What were you doing? Why were you closing banks?
So this story is kind of interesting. I hope if I go too long with it, stop me. But I had an opportunity to become a market president for a bank in a city I loved. And I took that opportunity. It was a bank that their financial performance had been amazing. I knew they had a few problems, but I'd always wanted to be the market executive in a town that I love. So I took that opportunity. About 3 months after I joined them, they had to restate their financial statement. There was some loans on the books that were not quite as they appeared, and it went from showing a significant profit to a loss. About 3 months later, Ray, I actually took my first day off. I was mowing my yard, and I got a call from the office, and they said there are black SUVs pulling into the office. So I throw on some clothes, I rush back to the bank, and sure enough, FDIC had shown up to close the institution. But the bright lining to the story, my first job after I finished my MBA at the University of Arkansas was with the FDIC closing banks.
Wow.
And who walked in the door but my first boss after I'd gotten out of college walks in the door He looks at me, he says, Lance, I know you didn't have anything to do with this, and I know you have a lot of knowledge about SBA. So here's what I'd like you to do. So he connected me with Deloitte. So I worked with Deloitte, and the FDIC would contract with us on bank closures that had significant SBA portfolios. And anytime a bank was closed that had a significant SBA portfolio, they would bring me and my team in to handle that part of the closure.
Gotcha.
And back then, it was like a lot of people might suspect. We would actually come into the town a couple days before. We would sit out on the outskirts looking at the bank, and on Friday afternoon at 5 o'clock, we'd walk in and take possession of the bank.
That's crazy, man. So you're like, are you in the black van, like in the back, like talking about like?
Was not actually in the black van, but I have been one of the first people in on bank closures. I think the thing that people have to remember about a bank closure, and I hope we never get there again, is there are a lot of great employees sitting inside that bank that are terrified. And one of the first things, I don't know if I have a calming personality, but one of the first things they had me do was frequently I would get the employees in a conference room and explain to them that there were employment opportunities working with the closure team, and just kind of help calm them down and make them feel not great about what was happening, but a little better. So many of the team members that helped me actually liquidate the banks were actual bank employees.
And I'm sure it wasn't their fault of what was going on. So yeah, I mean, if somebody was going to shut down my bank, I would want it to be you.
Yeah.
So,
well, I don't know that I'm going to get back into that business again. I've gotten a little too old and don't like traveling that much. I've always joked with my wife, I used to be Hilton Diamond when I worked for Deloitte doing the FDIC closings, because I would spend 50 consecutive nights in a Hilton property. And
wow.
I haven't been
really.
Yeah. I stayed 52 nights in a Hilton Garden Inn on a bank closure one time.
That's got to be tough.
It was challenging, but I'll tell you this, and this is not an advertisement for Deloitte, but when I worked with them, they were incredibly, they thought about their employees. They would send me home every other week or send my family out every other week to visit me on the closure site.
Wow. First class, I hope.
Not first class, but I got a lot of American Airlines miles.
That's crazy. So, were there any other crazy stories with closing down banks? Like, did a CEO ever say like, no, get out of here?
No, usually there's law enforcement that comes in early. So no, that didn't happen. And, one of my favorite bank closure stories is you had to reconcile the vault cash.
Mm-hmm. And
that took so long to get multiple counts to come to the exact number. I know it's easier now, technology.
Mm-hmm.
Ray, we use laptop computers that look like a bus that use WordStar and the spreadsheet program. I think it was WordCalc back then. So most of what we did was very manual. Now that was early in my career. When I did the bank in Utah, technology had kind of caught up, and
I mean, it's interesting because you've done these things that just give you this knowledge, and you've been there, you've done it, and it's such specialized knowledge, and then you become such a big asset for folks, most recently in the SBA lending community. Like, what are the skills that you kind of bring to the table for them? Like, why is everyone always trying to hire you?
Well, I started building SBA departments at some small community banks, and I really love that, Ray. To walk into a bank that's only done 2 or 3 SBA loans and to bring the SBA program in, to find the right people to work in that program, and to see it grow from a bank that has 2 loans in their SBA portfolio to a bank that has 150 or 200 loans in their portfolio. I got that exposure. I also decided, Ray, to take a position with a large regional bank because I felt like all of my SBA lending experience was with smaller community banks, and I wanted to know what it was like at a larger regional bank. I've just spent my entire career. There was a day when I decided that I love small business, and I think my dad is who put that in me, because my dad was a small business owner as I grew up, and he's 83 years old, and he walks in every day, opens the door, and still has a small business that he operates. So I decided to dedicate my career to helping small businesses. And in trying to develop a book of knowledge, I didn't want to just get in one part of small business lending and stay there. I worked as a director of SBDC, helping small businesses package their loans for banks. I closed banks and worked on liquidation of SBA loan portfolios. One of the fun stories about the bank closure, we talk about guarantee purchase packages. Mm-hmm. Back when we closed banks, we had to prepare a guarantee purchase package on every SBA loan, performing or non-performing, when we closed the bank. So if they had 200 loans, we had to do 200 guarantee purchase packages. That was what, back in the day, SBA would review those and certify that the guarantee was good at that time. So a lot of people consider me fairly skilled at guarantee purchase packages. Well, I had great exposure to it in those closed institutions where we were doing 200 and 300 guarantee purchase packages.
That makes sense.
But I've tried to bring different aspects of small business lending. I wanted the community bank experience. I wanted the large regional bank experience. But I just wanted to get a good overall knowledge of how SBA works.
Yeah. And, with the bank, that guarantee is so critical in our world. And obviously you don't know if it's there until you need it. And then you have to find out, right?
Well, I think that it's important for SBA lenders to recognize and understand the importance of their servicing team. Every bank does SBA lending with the reliance on the guarantee.
Yes.
They want the guarantee to be there. And that requires good underwriting, good closing, but it also requires a servicing team that understands how to prepare a guarantee purchase package and work with SBA and get that guarantee paid.
Yeah, and sometimes the servicing team gets a little bit, there's less focus there versus the rest of the originations type of team. When shops are getting built out, it's BDOs, underwriters, closers. And it's almost like the servicing sometimes can be like an afterthought, but it's
it shouldn't be. It really shouldn't be. Servicing, not only the regular servicing aspect, but for an institution to make sure the guarantee's good, you need people who understand proper servicing and liquidation.
And don't some shops have like a role just for liquidations?
Some of the larger shops do. It's really interesting. The small community banks, I told you I built SBA lending departments. As an example, one of the small banks I was at, we had one underwriter, one closer, one BDO, and myself. And so I was not only I not only made SBA loans, but I had to service and liquidate those SBA loans as well.
I mean, the amount of knowledge that you possess is like insane. Like I came up through sales, I've never done those things. I could not imagine liquidating a loan. Someone that's in that position, especially if on those bigger shops where you're really just in liquidations all day long, that seems really depressing to me.
It can be, but it also is an opportunity to work with customers. Liquidation can go one of two ways. You can have an uncooperative customer and it's just a process. But there are times when you can work with a customer, maximize the recovery for the institution and the SBA, but also minimize the damage to the borrower who's being cooperative in the process. So, I mean, there are bright spots on the liquidation side.
When you were at New Tech for a period, right?
Yes, I sure was.
Were you working on liquidations over there?
I was mostly working in the servicing and liquidation area. I worked with Rob Hawes. I don't know if you remember Rob, but we also did some contract work for the FDIC when I was there. And we worked on a couple of closed institutions with SBA portfolios.
So having done all these different things, like what do you gravitate towards now? Like what do you think gives you the most energy? Is it more of the building, or is it more on the servicing side with liquidations, sales? What do you like the best?
I love servicing, liquidation. I love sales, but honestly, and I've shared this with you, I want to spend as much time training my team, but not just training my team, training everybody in the SBA industry, because I feel like I have a limited number of years. People like yourself and others who are in the industry have a lot of years left in the SBA industry. I want to do what I can do to make the SBA industry continue to thrive. And I think training and educating other SBA lenders is a very important part of that.
Well, I mean, we certainly need that. I mean, it just always, we've talked about it time and time again on this podcast about everyone just wants to hire people that already know how to do it. So there's not as many new people coming in as we would like, because who's going to train them? Well, you can.
Yeah, and I shared with you what I'm doing. I teach adjunct at a university. I currently have a class of 12 senior accounting majors. This is my lunch break on Monday and Wednesday. These students, the university chancellor, and I sat down and had a conversation. I explained to him what the SBA industry is like and what the opportunities are like for young people. So he said, you can teach whatever you want to. And so I'm teaching the small business lending course. The textbook is the SOP 5010 7.1, of which my students have read it from page 1 to the very end. They are required to complete all the required SBA forms on a fictional business. They get, I think, around 44 hours of me lecturing them about various aspects of SBA lending. They have been asked to watch your show, your podcast, and they have received points for watching your podcast. And they've been asked to watch.
That's why our views are up.
I was about to say, that's why our views are up.
Yeah, you get 10, you get 12 from my class. Part of the point total it's a real unusual class, but they get 10 points each time they watch your podcast and send me an email and tell me something that they saw on the
That's
podcast.
awesome.
And they get 10 points each time they watch a Coleman report and send me an email and tell me something about what they saw. So, I mean, these kids are ready for jobs.
Yeah. So have any of them actually transitioned into a job?
At Mid-America Lenders Conference, there were 2 banks that were in my breakout session that I shared the story with them prior to doing the training, and 2 banks have committed to hiring 2 of the kids. Now, we don't know which 2, but I'm working on that right now. And that's the ultimate outcome.
Yeah. I think that there needs to be some sort of mechanism for that that seems like the next thing, because you're giving them all this knowledge, then they have to be able to have that path to the industry.
And that's the ultimate objective. I want to prepare them,
Mm-hmm.
and then I want them to get an opportunity to use what they've learned.
Yeah, I think that's amazing. I mean, that's the type of work people need to be doing, to pass down the knowledge to the next generation. And it's hard because everyone's been busy.
Yeah.
There's not a lot of infrastructure in place to transfer the knowledge to these other people. I mean, you had to go create a course at college.
Yeah.
That's amazing. That's awesome.
Well, there are people in this industry, you mentioned Chris Hearn. We talked about my friend and somebody I do work with, Bob Coleman, guys like Chuck Evans and others who have been in this industry for a long time. We all need to be sharing as much information and knowledge as we can with everyone in the industry, because it's just going to make SBA lending not only survive but thrive.
So when you went into the classroom on day one, did you do one of these and plop down the SOP on the student's desk?
I actually just provided a PDF. So teaching's different than it was when I first started teaching at the University of Arkansas. Now I've got this electronic folder that has the SOP 5010.7.1, the SOP 5057.3. It has a lot of articles and information in it that they can access whenever they want to.
How do you teach a class last year when they changed the SOP like mid-semester?
I actually had to make some adjustments as the class goes along. And I got to tell you, Ray, it drives me nuts. So taking away the SBA loan authorization and trading it for SBA loan terms and conditions. I don't have a problem with that, but my mind can't wrap itself around it because in my class, I'll walk in and say, okay, the closer's going to take the SBA loan SBA loan terms and conditions.
That's the thing. And that's kind of like the heart of SBA. It's like, we can tell you what you have to do, but I can't always tell you why.
Oh, yeah.
I mean, you would know better than anyone the why behind it, but sometimes it's really hard to explain like why there's no equity injection requirement for a startup and why. I mean, they got rid of the verification of the equity injection is now do what you do.
Yes, do what you do. If you would verify and document the equity injection on a similar size non-SBA loan, then you have to do that on your SBA loans. I'm going to be honest with you, Ray. I would still, as a lender, require equity injections on startups, and I would still verify and document the equity injection, irregardless of what your commercial policy is.
It's amazing. I mean, we're at the NAGGL conference. We've been coming here for years. There's whole classes on equity injection verification.
Yeah.
60 minutes of straight up like slides. And now it's nothing.
Yeah, it's interesting. I taught a webinar for Coleman on equity injection recently. And the webinar was basically centered around what the changes were. But then I came back after that and I said, this is how we did it before, and this is what I'm going to recommend you continue doing.
It's do what you did.
Part of my, do what you did instead of do what you do. Part of my challenge with it, the SBA guarantee purchase that occurs, which is so important to every institution. One of the community banks that I worked at, they had a bad experience on a guarantee purchase. They had a small portfolio, and they had one loan that was in liquidation when I came to work, and I picked it up. I did the guarantee purchase package. I got us paid, and the chairman come put his arm around me and said, SBA lending's all right. But before, he didn't feel that way necessarily. Where my concern comes in with some of the rule changes is, are those rules going to change back? Are they going to flip back 1 year, 2 years, 3 years from now? Your guarantee purchases don't happen in the first year that you originate a loan under the 5010.7.1. The guarantee purchase is going to happen 3 years, 5 years, 7 years down the road. So one of the things I try to encourage people to consider is, let's say you decide not to have an equity injection. I'm going to grab a snip of the SOP 5010.7.1 that makes that statement, and I'm going to put it in my file behind the equity injection. So if we have a guarantee purchase 5 years from now, and SBA goes back to requiring a 10% equity injection on a startup, they're not going to be able to question what you did.
Even 10% was light, if you ask me.
Oh, yeah. I had a call with a borrower the other day. They were considering refinancing their loan, and they were trying to figure out why they would want to keep an SBA loan. And it was an SBA loan that was done mostly for furniture, fixtures, and equipment and inventory. And it had a 10-year term. They were a couple years into the loan, and they were thinking about refinancing, and they wanted a lower rate. And they asked me, I had been a small business owner in the past, and what would you do? And I said, look, if you go to a bank and get this refinanced, the bank's probably going to give you a 3 to 5 year term. They might lower your interest rate 1%, and you're going to end up with a payment that is significantly higher than the payment you currently have, and you're going to spend some money on closing costs. If I were you, instead of refinancing the loan, I would go ahead and throw some extra money at the principal balance each month, make an extra $500 contribution to your payment and pay the principal down and not worry about going through the refinancing process. Because as we all know, 2 reasons SBA is good for small businesses: the terms are longer and the collateral requirements are not as steep.
Mm-hmm. I remember the SOP that I started out with. I couldn't tell you the name. They don't make them that catchy. 50-10, 7.1. But for goodwill acquisitions, it was 75% advance rates max.
Yeah.
Remember?
Absolutely.
All of a sudden, it's 10%. And at that time, I thought, yeah, the SBA says we can do 10% injection, 90% financing, but no one's really going to do that on a change of ownership. It's become extremely commonplace to do 10% injection on a business acquisition.
Yes. Many
times there's no seller note. They should always have a seller note, but sometimes there's not. And even of the 10%, sometimes a portion of that's now a seller note. So you can do a 90% financing, 5% cash in, 5% seller note on standby type of structure.
Right.
That's aggressive. Do you think, since you've been around longer and you've seen just how banks end up moving in terms of their credit, is it one of those things where banks eventually just creep up to the edge of what they can do?
I think you see a lot of well, I've had 2 experiences in SBA lending. There are some SBA lenders who try to follow, they've been following the do what you do rule for a long time, meaning they originate SBA loans like they were a regular commercial loan. So they'll have excess collateral, they'll have substantial equity injection, and they make an SBA loan that never has a chance to fail. My problem with that is you're missing out on opportunity and you're not really serving the small business community by doing that. And then there are banks that are financial institutions that'll do the minimum. And that's a point I always want to make about SBA lending. The SOPs minimums and maximums. The equity injection question, if you're doing a restaurant with a 10% equity injection, 5% seller financing on standby, and 5% cash in from the borrower, when you get to a liquidation circumstance, that's going to be an issue. It's a problem. I want to tell you one of the things I love about the SOP change.
Okay.
So for the longest time, seller financing on standby to be counted as equity injection, it was only 2 years.
Mm-hmm.
And then in the 50-10-6, they changed it to life of the loan. Essentially what that guaranteed is the seller was only going to finance the minimum they had to get the deal done. Going back to 2 years means there is the opportunity to get more seller financing involved in the project. On a lot of these business acquisition loans, I'd really love to see seller financing. Maybe they do the 5 and 5, but the seller picks up an extra 20% or an extra 25%. From a servicing and liquidation standpoint, that a lot of these business change of ownership loans have a lot of goodwill. And I think sellers, if they realize they're only going to be on standby for 2 years, will consider picking up a larger percentage of the project in terms of seller financing. And I hope that's what ends up happening over time.
Well, I agree, because when buyers were going to sellers and saying, hey, I need you to hold 5% on full standby for the life of the loan, well, the seller wants $3 million. So now the price is going to be, if you want that 5% in there, and I have your offer, and then these people are going to come in with the full 10% cash, but they only want to pay me 2.9, and 2.8 million. I'll go with your offer because I'm going to get my 3 million. So it's almost like it's not real seller note. It's almost like artificial.
Yeah.
It's almost like the price just increased because they're taking these less attractive terms for the higher price. And at the end of the day, that's not really skin in the game from the seller like it would be with a 2-year seller note.
No, I agree 100%. I think sellers do potentially price in.
Right.
Because for us to sit and think a person selling a business has not heard, previously when it was life of the loan, had not heard that, you have to do, so you don't have to, but in a lot of instances, you might have to do 5% of the deal, seller finance on full standby. I know they priced it in.
Yeah.
So I like the change to 2 years because I think it builds a playing field where sellers will sell the business at a reasonable price and will consider financing even more than the minimum requirement.
But then they also went a step further and did the partial standby.
Yeah.
Which is like, it's fine. But again, it's one of those things where it's like, if you tell a seller it could be on partial standby or full standby, they're going to say, all right, yeah, I'll take the interest payments.
Yeah.
And it's an easier sell for all the people involved, the buyer, because some of these buyers are just more concerned with just getting the deal, just because it's really hard to find good quality businesses to buy right now. And there's a lot of competition because now all the buyers know that you can buy businesses. That world of entrepreneurship through acquisition has really opened up through books and podcasts and social media, but there's still the same amount of sellers out there that have good businesses to sell.
My big deal on business change of ownership loans, more so today than ever, the lender needs to look real closely at the resume, work experience, educational background of the buyer. I am seeing new entrepreneurs come in and buy businesses that have no business experience. And that can be a recipe for failure if they don't go out and find a key employee. For all these years, we've collected resumes on SBA loans, and it's just one of those documents, you throw it in the file. But I have, over the last couple of years, become very, not concerned, but very I am a little concerned about the business acumen, the experience, and the abilities of the person buying the business. Because I've seen some business acquisition loans where you've got somebody buying a business. Beautiful example on projections. I've used my brother as an example. My brother's been in the furniture business for 27 years. He's got a great furniture store, great cash flow. Let's say he sold it to somebody that lives in the community that never operated a business. Mm-hmm. Maybe they had some business experience, but they never operated a furniture business. So we get projections on what they're going to do going forward. And the projections show the new buyer having greater revenue and greater cash flow than my brother, who's operated it for 27 years, could have. I'm not going to accept those projections. I'm going to want to see a haircut on that because I know there's no way a new owner's going to do more, probably not the same amount as somebody that's done it for 25 plus years.
Well, I agree. The projections on these deals that's why you don't underwrite. Like, we're looking for historical on the business.
Yeah.
Like, on a change of ownership, you have to have such good, robust cash flow and debt service coverage for multiple periods because it's going to come down post-acquisition.
Yeah.
There's a thing called the J curve, which, the buyers understand, which is like, hey, I want to come in, I want to buy this business, I want to grow it. But before you grow it and grow the cash flow, you're going to go down because you're going to do things less efficiently than the seller did. Costs might go up. You might want to put some reinvestment into it to put some softwares into place and stuff. And cash flow is going to be really tight. Year one is like drinking from a fire hose. It's just a different risk profile than we're used to.
Yes.
But that's what a lot of buyers are signing up for. And banks are doing those deals now.
Oh, yeah.
And it's just that landscape has changed.
Well, just to share with you why I sold my business. I was a small business owner for 8 years. I owned a Radio Shack.
You own a Radio Shack.
I owned a Radio Shack for almost 8 years.
Are you allowed to give us business advice now?
I know Radio Shack is now bankrupt, but guys, when I had my store, it was a hot growing industry business. But I had a Radio Shack franchise for 8 years, and I made a good living with a Radio Shack franchise. The reason I sold it and left was I was working Monday through Saturday, 7 a.m. to 8 p.m., and I would come in Sunday after church and do my accounting work from about 1 o'clock to about 5 o'clock. I didn't see myself working that much for the rest of my life. I love to give 120% effort, but I finally came to a point where I can't work 80 hours a week anymore. And that's what it took to make it successful. I only share that story because a number of small business owners look at a business acquisition and think they can come in and work 10, 15, 20 hours and let it just operate. Anybody who gets into small business has to be dedicated to give it 100% of their time and effort. And those are the kind of borrowers that I would look for in business acquisition deals.
Mm-hmm. Mm-hmm. Let me ask you this. When you were working across the various institutions or government, did you ever have like a younger employee that you worked that you had to deliver some sort of reality check to, that you maybe saw something they were doing the wrong way, or maybe just were able to correct their path, or anything like that jumping out at you?
I've had team members on more than one occasion that were not necessarily working at the level we needed. Oh, well, I'll share the story at SBA. When I came to SBA, the servicing center had a goal of completing servicing actions within 3 business days of receipt of that servicing action. But that was a center-wide goal. There was no goal for the individual servicing team members that were actually carrying that out. So the first thing I did, Ray, is I went in and looked at the number of servicing actions, the types. I looked at the team, their experience levels, and what I thought they could accomplish. And I established numerical goals, both in number and time, for the team members at the SBA Servicing Center. And they had not met goal. I couldn't tell that they had ever met the goal, but suddenly within 6 months, when everybody received a goal, a number goal, you're going to do 120 of these a month, and they're going to be at least 90% within 3 days of receipt. Suddenly, we were providing exceptional customer service to the banking community. It was not that they were doing things wrong. It's just that so often we'll have a team that's out operating and we don't give them, hey, I need you to complete this many. Yeah. I need it to be in this time frame. So there were team members that were not performing up to the level we needed them to for the organization to meet its goal. And it was just a numbers game for me. I figured out what each person needed to do and how quickly they needed to do it. And it only took about 6 months after we implemented that to where we were completing 90% within 3 days.
Wow. What other government agencies can we send you to?
I was kind of an oddball. SBA does not have a lot of private industry people that come and work at SBA in managerial roles. And that's not necessarily a bad thing, but people go to work at SBA and they stay and they move into different roles and they do great things. I have so many great friends at SBA that are doing wonderful things for the small business community. But I came in with a perspective of, I had worked on some SBA deals, but I had never worked at a government agency. So, I came in hoping to bring some private sector ideas.
That's the dream, right?
To the agency.
Well, that's a lesson in just giving personal goals. I mean, it's almost like one of those things where, you just assume someone else is going to pick up the slack or something. Like, it's not on me, it's on the group. And it's like, without that accountability, it's easier to not take, the bull by the horn essentially and try to drive on making that impact.
Well, we did the same thing recently. I'm going to say a 3-letter word that will make people cringe with PPP.
PPP, yeah.
We had 298,000 PPP loans, and we serviced and took care of that with a relatively slim team.
Wow.
And it required everyone having a goal, everyone having a time frame for which they accomplished that goal. So we just broke it down. Like when we were going through the guarantee purchase process on PPP loans, we do 300-400 a day at times. So, we would work through each phase of that, and each team member had a goal. And, whether or not they got to stick around and work with us depended on how well they worked toward those goals.
Well, that's great. So we're getting towards the end here, so I want to wrap up, but there's a couple of things I still want to ask you about. I know you're doing the trainings with Bob, so everyone's seen that. Coleman's an institution.
He's a legend
within our industry. Absolutely. Great guy. You do like pretty much all his training, right? Like,
I do quite a bit, yes.
So, people can check that out. And is there anything else that we need to cover or haven't talked about?
The one thing that I wanted to share is how proud I am of my children. It's kind of a fun thing because my girls grew up with a dad who talked about SBA all the time. Mm-hmm. And I don't think any of my children ever envisioned working in the industry. Now, I have an older daughter who got a master's degree in therapy, and she's working for an agency, and she's doing wonderful things. But my middle daughter is now working with a community bank. I got an opportunity to sit down with her and the lenders and talk about SBA lending. And they have started doing some SBA lending, and she's kind of leading the effort, helping lead the effort at that institution. So I'm real proud of that. And of course, many of you might know my daughter Delaney because she writes Fraud Friday, and I know a lot of people like to read that. But my youngest daughter Delaney is now writing about SBA lending. And one of the coolest things, guys, I get calls and emails from people all over the country with questions about SBA lending. I get at least 40 emails a week where somebody will ask me a simple question. I reply to it. Somebody says, "Why do you do that for free?" And I'm like, I just want to help. But one of the calls I get almost every day is from Delaney talking about some SBA lending topic. And, it's fun to have my children grow up and say, I'm never going to do that. But all of a sudden, they are working in the industry. Yep. And we have plenty to talk about when we have gatherings now.
That is so true. And that is a phenomenon. Like, people with kids, they don't want to do it, but then they end up doing it. And you know what? Rightfully so. It's an amazing industry with such great people all over the place. And I'm a huge fan of Delaney. She does an incredible job. Bob will throw her a ball and she just always catches it. I could tell she does her homework and has to really communicate really sometimes complicated stuff, and she does a great job.
She asks her dad some complicated questions at times. She will have SOP questions for me. And I think she loves to find a question where I actually have to go to the SOP and look it up before I answer. I get some great questions from lenders throughout the country who find a gray area and want to ask a question, and I love to answer those. And actually had a BDO the other day that I spent 30 minutes with him and one of our loan specialists, and he just wanted to ask some questions about SBA lending so he'd have a better understanding. And he was very complimentary, Ray, of your podcast, because he told me, he said, part of my training in becoming a better SBA BDO is the art of SBA lending. And so he loves watching the podcast, but he just wanted to ask questions. Mm-hmm. And I was more than happy to take 30 minutes out of my day to answer his questions. And he had some pretty interesting ones on affiliation. So,
that's a good topic. Yeah, dive right in. Yeah, I'm the same way, Lance. I mean, people reach out to me all the time, and I take every single call, and I do whatever people want. I do, because when you're lucky enough to be in our position and you've had an amazing career. I feel very fortunate to be where I'm at. You want to pay it back. You want to pay it forward.
Ray, when I was a MBA student at the University of Arkansas, I didn't envision being where I'm at, being able to do the things that I've gotten to do, being able to meet the great people that I've met over the years. But I knew I wanted to be in the small business arena. And I had a kid at a high school. I was doing a presentation at a high school, and he had, well, how do you get to where you're at? I said, you spend a lot of years, you read a lot, you meet a lot of people, you work hard, and you'll get there. But you've got to love what you're doing. And you and I love small business.
That's right. Well, this was great. I mean, thank you so much for doing this.
Oh, it's great to be here. I was looking forward to my opportunity to be on the podcast.
Well, perfect. Lance Sexton, it's been a pleasure.
Thank you.
All right, that's it for this week. Don't forget to subscribe to the podcast so you never miss an episode of The Art of SBA Lending. And if you have any feedback or suggestions, email me at ray@artofsba.com. Until next time, ta-ta.